Warm welcome to each one of you. I hope all of you are doing well along with your family members. And I really hope and pray that all of you keep safe and stay healthy. My apologies that we are a little late because of some technical glitch. But I'm sure by the time we progress, this technical glitch will be taken care of. And this technical glitch is actually on my partner's end, which he's working on. So friends, today, all of you are aware that your Market Navigator series is one of the initiatives जो बिरला म्यूचुअल फंड आदित्य बिरला म्यूचुअल फंड ने कुछ 2 महीना पहले शुरू किया था. The idea of this call is to come and talk, with the portfolio manager on a certain product. And ये जो conversation है, ये कोई और नहीं, हमारे partners करते हैं. And they usually do this to ask the ground level questions to have more understanding of the product and to pitch the product in a more convincing manner. अभी तक का जो feedback रहा है, thanks to all of you, has been phenomenal. This actually inspires us to keep doing, your Market Navigator MFDR series again and again. So today is a very, very interesting day, very interesting topic, which is conversation around Aditya Birla Sun Life GenNext Fund, one of the most interesting products from our bouquet, my personal favorite. And I am sure many of you have been giving this product to your customers for long, and your customers have also seen the journey of this fund, and they have also benefited from the portfolio and the past performance of the fund. So I'm very excited about today's evening. We have Mr. Chanchal Khandelwal, who is the fund manager for this particular product. So Chanchal has been with Aditya Birla Group for about 15 years and with Aditya Birla AMC for about 10 years. And he has been managing this particular fund for about 6 years now. That's a long track record for managing this fund. Along with this particular fund, Aditya Birla GenNext is also one of the co-fund managers with our Special Situations Fund. And joining Mr. Chanchal is one of our esteemed partner from Nasik, Mr. Pranav Gadgil. Pranav is a very well known in the Western region, very, very suave partner, and very interesting person, the kind of experience he brings on the table and the perspectives he brings on the table. I'm sure all his colleagues, all his clients are also benefiting. So Pranav has been in the business since 2003, and he runs a business, the firm called Samyak Financial Solutions. As I said, he's based out of Nasik and has been managing this business since 2003, about 18 years now. And currently is managing more than 500 families, and the total assets under management.
Thank you so much, Vaibhav sir. I'm glad that Birla has given me this opportunity to speak on behalf of all the MFDs in India with the fund management team. And I would first like to congratulate all the fund managers for having a very, very terrific year over the last 1 year to 18 months, which has been a very, very turbulent time for us personally. And I would say even as far as professionals are concerned, because the market has been through all over the place. And I think it has been a terrific job, and the handholding by all the fund managers has been quite stunning. So thanks a lot. I would start the session by, I think, first of all, asking Chanchal sir the most common question, कि अभी क्या लगता है? That I think over the next 50, over the last 15 to 16 months, market has been in a super bull run. So before coming to the fund, I would just like to ask him what does he make out of the market currently, and how does he see things going forward?
Hey Pranav, thanks and welcome everyone. It's a good question to start with. Abhi kya lagta hai has been a question around right from Diwali. I remember getting calls when people were calling to wish me a happy Diwali. Ab kya lagta hai? I think market was at 12,000-13,000 there, and we are scaled to 17,000. Nifty I'm talking about. Now, the way to look at market is that the market P is a factor of multiple things, and you and I and all of us would be joking if I can tell you that I can time the market, or I can say when is the top of the market or when is the bottom of the market. It's very difficult to say that, but what we study and what we spend time in is studying the underlying strength of the economy, whether the economy is improving and things are moving on the positive direction. So if I take a 2 to 3 year view or a 5 year view, I think fundamentally we are in a very strong position. As a nation, this has been the strongest position we are in. Our forex reserves are very strong. Globally, people are looking as an alternative to China, and India plays a very important role as an alternative to China. Our PLI schemes, which the government is rolling out across various industry, that that investment will start, and we will see huge amount of capex coming up, specifically in the sectors which were not part of the investment behind. We've seen how chemicals as a sector has come up, how textile as a sector. Today itself, the PLI has been announced. How consumer durable as a sector will come up. A lot of companies, like from Apple to others, are going to invest in India. So investment is happening. Monsoon has been a little below normal, but I think the last 10-15 days monsoon has picked up. Rural economy is booming. People are making money in the market. People are investing in real estate. Real estate has a multiplier effect in the GDP. So once real estate cycle start, that multiplier effect will start in the economy. That will benefit the economy going forward. Credit growth has not picked up. That's a concern, and that's reflected in banking valuation. But once things start normalizing, once people get confidence, credit growth will come back. That is what our view is, because few sectors of the economy did get disrupted. Those may take time, but those will ultimately come back once the GDP growth comes back. So fundamentally, I think that GDP growth is in an improvement trajectory. We'll see a strong GDP growth going forward, and this will get reflected in market, in companies which will become stronger. So one should be invested in the market. Can market go up further 15-20% from here in the years? Probably not. I'm sure 15%, 20% from a year doesn't look like, given the valuation we are standing. But if you take a 3 year view, you can still compound your return better than the FD return for sure, because of the economy and the fundamental strength which the economy is showing now. So one should keep invested. One should keep their SIP going. One can never time the market. So that is what our view is. But fundamentally, we are in a very strong position.
Thank you, sir. My next question would be obviously about the scheme today that we are discussing, which is the Birla GenNext Fund. Can you put more light about what the scheme is about? How is the stock selection done? What are the companies that we look at as far as the basket is concerned for the scheme?
Sure. So Pranav, thank you. I don't know, आप नासिक रहते हो, right?
Yes, sir. Yeah.
Which is the most beautiful area if I were to buy a flat in Nasik, or best area to buy a flat in Nasik?
Well, I would say the College Road or the Sharanpur Road or the Gangapur Road, whatever it is.
The Military Road के आसपास ही कुछ ऐसा है. I don't know Nasik so well. And what is the per square foot rate in Nasik there?
Well, max to max it will be around 7,500.
8,000, 9,000 square foot max to max. And पूरे
Max to
नासिक
max
का एवरेज कितना होगा?
Sorry?
पूरे नासिक का एवरेज कितना होगा?
Around 5.5.
5.5 होगा. 3-4 हजार रुपए स्क्वायर फुट में भी जगह मिलता है, मैं सुना नासिक में.
Yeah, on the bit of the outskirts you can get. Yeah.
Sure. So the idea, मैं प्रणव भाई से यही पूछ रहा था. The idea is that a lot of people keep asking me that is it time to invest in consumption theme? Is it good P to buy in? अच्छी चीज महंगी मिलती है, right? आपको अच्छा चीज लेना, अच्छा जगह लेना, 8,000 रुपए 9,000 रुपए स्क्वायर फुट से नीचे नहीं मिलेगा. एवरेज 3,000 रुपए स्क्वायर फुट में जगह मिल सकता है, बट अच्छी चीज आपको आप वहीं 10,000 रुपए स्क्वायर फुट में जाकर जगह लोगे. So where I was heading to is that basically the fund, the way we manage this fund and the way the fund has performed is that we look to buy good quality companies, good cash flow generating companies, good companies where the longevity of the growth is much superior. And that's where we look to buy, and that's where the fund has outperformed the market over much longer term. You should be invested. If you still don't have a SIP, it's a must own fund from Birla Staple, I would say. But what we look to do here is that we look at the India next generation of the India, where will they spend. Average Indian is still 35 years of age. They will grow and they will spend. And where will they spend? What will they consume? Where will they buy? and we look to buy good quality companies on that space. We look at opportunity size, the size of opportunity, कहाँ पे बड़ा growth आ सकता है इंडिया में, next generation जाके पैसा कहाँ खर्चा करेगा, कहाँ growth आएगा, and that's the way we build up portfolio. We look at various sectors within the consumption basket, and that's where we look to do that. We own right from staples to durables to retail to tech. By tech, I mean the B2C tech part of the business. All the companies with GenNext can own are B2C businesses. B2C businesses is the only cap which we maintain here. We invest in insurance, we invest in banking, we invest in NBFC. We even have real estate exposure. So that's the way we build up this fund. The idea is to build up bottom-up companies. Companies should be leader in their segment. Companies should be have a decent history and a good quality management and a longevity of growth. And that's the way we look to build up this fund.
So I think one of the questions which I was supposed down the line was that usually the B2C businesses look pricey when in comparison to some of the other cyclicals. At least that was the case, say, a year back. So always this question is there that how the valuations stack up, and looking at the sector rotation that usually happens in the market. डू यू सी जब भी मार्केट बढ़ता है तभी हर वक्त ये इंफ्रा की स्टोरी चालू होती है, हर वक्त कैपिटल एक्सपेंडिचर की स्टोरी चालू होती है. सो देन पीपल and even the sales guys into mutual funds start they will start promoting the infra funds. Do you think a person from that point of view need to get out of this theme? Is this a fund where timing is required, or this can be a real good long term in anybody's portfolio at all times?
Good question, Pranav bhai, but I think this is a good long-term steady compounder which one should have it in his fund. Infra and capital goods are cyclical sector. One again, market में timing is most difficult, which all of us know that. So fund managers do buy infra story, but here we can buy cement and real estate. That's the way we play beta, and banking itself by its nature give us a beta in the portfolio, and banking is a good way to play the infra story. But I think as you rightly said, infra, it's all about timing. You have to get the timing right and you have to exit right. The best part of this fund is that it can be good long-term compounder, and you can buy it and consistently invest in this fund and sleep over much longer term. We've seen over longer term cycle that market, the reason, the difference between infra company and consumer company is that normally the ROC is decent in this kind of company. And ROC is basically क्या आप अपने 100 रुपए लगाया तो उस पे आप कितना कमा रहे हो और कंसिस्टेंटली कितना कमा रहे हो. जितना ज्यादा कमाओगे उतना ज्यादा कंपनी पैसा बनाएगी, उतना ज्यादा ग्रोथ आएगा, उतना ज्यादा फ्यूचर अच्छा है. So that's the reason the consumer companies by very nature are better quality companies to invest in. And we also look at the evolving space. We have an eye on market कहाँ जा रहा है, कहाँ पे tech पे new sector evolve हो रहा है. That's the reason, that's the way we play it. Infra में normally the ROC over cycle tend to normalize, but ROC in a good cycle is good, but over a bad cycle the ROC tends to, because it's by nature you need to invest a lot. It's a capital intensive industry. So that's the reason this fund, the timing is not important, but you have to be invested over longer term. That's more important in this fund.
I think over the last say 12 to 18 months, especially since some of the funds have been doing quite well with exposure to the international space, I think that is something काफी सारे fund houses वो space में नया scheme launch कर रहे हैं. And I think as far as B2C is concerned, we have seen that these FANG stocks, especially from the US, as B2C businesses. Do you see that this fund has any scope to invest money there? Is there any need to do it, or you are very happy just investing in the Indian markets?
Sure, Pranav, good question. But I think the fund talks about GenNext, and GenNext is in India. So that is where I should start this focus on. But the fund mandates allows us to take some international exposure. We have been internally debating, but as and when we feel comfortable, we find good ideas there, we will surely look to participate in next generation theme in terms of global bank stock. In few of our fund, as you must have noticed, we have already started exposure investing in international stock. So we have an investment universe wherein the universe is defined by how various analysts covers the stock. in various sectors. So we already have some international stock in our investment universe. So we have stock like to name it Louis Vuitton, Starbucks, which we have taken, or Microsoft, or the Netflix, which we have taken exposure in various funds. Amazon, for example, we can look to add few of these names in this fund, but we'll evaluate and we'll slowly try and invest there.
So, but how much, means how much international exposure would be allowed as per mandate?
I'll have to check on the exact percentage, but I think it's we can go to as high as 20%. That is what the mandate allows us.
Okay, okay, okay. So now, as you rightly said, that these businesses generally enjoy a pretty high, a pretty high ROCE. And but is there, yeah, may not be too stock specific, but would you be able to give us some of the names which you think have generated very good wealth for you over the last, say, 6, 7, 8 years, which have been multi-baggers for you? Are there any such stocks where, looking at the valuations being too stretched, you have, means you have actually exited the stock? And can you just share a bit more about how some of the stocks have done for the portfolio in the last 5, 6 years?
Sure, Pranav. I mean, without naming the stock, few minutes back, I was in discussion with one of the largest biscuit company in the country. The CEO was there with us for a one-to-one discussion. We were just discussing how from biscuit is diversifying into dairy as a space. Dairy is 6 lakh crore ka market opportunity, right? Biscuit was 50 lakh crore ka opportunity. How that can, so that's been a good investment which our fund has it. We recently invested in a company who's delivering food to your home, which got listed in India. We think that that's a big opportunity. सब लोग घर में अब खाना मंगाएंगे. India, for example, on an average, we eat 4 or 5 times monthly outside, but global average is 32 times. So India में लोग 30 बार तो नहीं, at least 10-12 बार खाना वहां से मंगाएंगे. तो that's a big opportunity. The market itself will double. That's one other investment which we have done. That there are times when we thought that the stock is fully priced and we have sold that. It's a big paint company which we don't own in our portfolio. We sold that thinking it's expensive, but still the stock has done very well from there. So I don't know to name the stocks. You would have guessed few names, but one can see the portfolio by itself. But idea is that good quality stocks where the earning growth keeps coming. We normally don't like to sell the stock on valuation, because valuation के basis पे कभी आप बेचते हो तो longer term आप पछताते ही हो. ऐसा market ने all of us learn from the market on a regular basis. What we see is that fundamentally is the last 2-3 quarter company की earning growth में problem आई है. Is the company going through a bad phase? Has the CEO resigned? Is the company moving in a different partner, and has the momentum in the business lost? That's the time we decide to sell. Just on the valuation, we normally don't decide to sell or exit the business. We look at the business fundamental right to win, why the business can grow over much bigger over longer term, and that's where we like to be invested in good quality businesses for long term. Because आप अच्छे business में long term में invested रहोगे तभी बड़ा पैसा compounding से बनता है.
Okay, I think one of the inputs which you gave, that you would like to be in the banking and the finance space because that is something which will touch everybody's lives. But as you also said, that banking is one space which is also pretty high beta. So do you change the exposure there as far as allocation is concerned, or usually you try to match it with the, with the Nifty allocation? Just
So
or is
a
it?
benchmark allocation, normally we try and maintain that. We do change the allocation if I'm very bullish on a particular sector. We do take sector call, but it's not very aggressive sector calls. We normally maintain a sector neutral status in this fund, and that's the way we play it out. Banking obviously would be a bigger part of the allocation, because in Indian market, if the GenNext is to play out, the Indian market may next generation may will go to bank and leverage will happen. Leverage doesn't mean that मैं leverage करके machinery ले रहा हूँ, plant ले रहा हूँ, construction कर रहा हूँ. Leverage करके मैं consumption भी करता हूँ. We've seen that one of the big company which is providing consumer finance, how has he compounded wealth over much longer term. That is the company we also own it in our fund. So I'm saying that, and that is the fund, and those kind of company have compounded wealth in China and other places also. So leverage by itself is not a difficult word. You have to know where and how things are panning out, and that's the way we look at it to invest in this fund.
So if we just put a bit of light, because I think the biggest issue which a lot of MFDs and also investors always face is the volatile nature of equity as an asset class. The ups and downs is really what makes people very nervous, and they end up taking wrong decisions at the wrong time. So as far as the B2C theme is concerned, can you share more light on how volatile it is in comparison to the Sensex or the Nifty or the
Sure.
broader market? So that, is it a more stable ride? Is it something which people don't have to look at much?
Yeah. Someone was sharing the chart before. Can you please share that photograph again? So if you see this, Pranav, look at 7 year, look at 5 year, look at 3 year. The return vis-a-vis the flexi cap average. 7 year, 5 year, 3 year, 2 year, 1 year. We can see that. Now, this fund doesn't allow us to invest in B2C businesses. In spite of not allowing us to invest in, sorry, B2B businesses, by that I mean infra or other B2B businesses, in spite of not investing in any of the B2B businesses, even tech names we don't have any exposure to, the fund has created a decent amount of wealth over longer term, be it a 10-year cycle or be it a 3-year cycle, be it a 1-year cycle. The best part is that the volatility in this fund is lower because of the very nature of the fund. If you see the allocation to consumer non-durable, which is a 24% allocation, a consumer durable is a 10% allocation, and retail is a 7% allocation. Within the banking space also, we choose insurance to be a bigger allocation, because insurance by nature is a less volatile business. That's the way we try and manage this fund. We have exposure to various themes, but at the same time, we try and reduce the beta by not compromising on the growth. We look at growth at a lower beta, and that's the way we try and manage this fund. And we look at decent compounder and decent. So the way the way we look at is that the TAM should be big. What is TAM? The target market opportunity should be much bigger, which the company is trying to address. That's the first thing. Second, we look at the quality of management. It's very important to back the right management quality. That's what we look at, because we look at marrying a stock. By that I mean that we are not buying a stock for 1 month or 3 months. We buy the stock from a longer term perspective. So you have to check the integrity of the management, and that's where things play out over longer term. We will make mistakes. We must have made mistakes in the past, but uh, if you look at the TAM, if you look at the management quality, if you look at the return ratios, if you look at the compounding capability of the company, the fund creates a much bigger wealth over longer term, and that's the way we look to manage this fund.
So basically, I think this, by whatever inputs you have given, I believe that this fund is one of the must-haves in anybody's equity portfolio. It is a very consistent wealth creator with less volatile nature of, of the stock movements. And so from that point of view, my next question was supposed to be that whom do you think this fund is suitable for? But I think looking at the very nature of the fund and the way it is done, and it being a less volatile fund, I believe that this fund is literally suitable for everybody, right from a child. I think from a child planning towards a retirement planning, I think this fund is something that fits into anybody's basket. Would I be right in that?
Sure, Pranav. So you know it better. You on the sales part of it. So be it a fund you are trying to invest for your daughter, or be it a fund you want to invest for your child's education for longer term, this fund would normally fit in those themes. But you have to be consistent to this theme. You have to invest over longer term. Then only you will be able to see the compounding effect, and that's the way you have to be invested in this fund. I would normally advise not people not to come and go out of this fund, because that's the very nature of this fund is to be invested over much longer term, and that's the reason SIP would be a best route to be invested in this fund.
So generally, generally it is suggested that a SIP should be done in something where there is higher volatility. Can you share some data that in case SIP was done fund, then though there hasn't been a huge drawdown, how the valuations have played out, how the CAGR has done? Can can anybody from your team would be in a position to share it?
Yeah, Pranav, so we have the data, but let me ask you a different question since I have the option to ask you, which is the best bank in the country?
HDFC.
How much % of your wealth is in HDFC Bank?
I think if you take any mutual fund, average 8 to 9% must be HDFC.
Good point. So you said that you are invested in mutual fund and mutual fund average 8 to 9% is in HDFC Bank. That's a very good point. So a lot of people ask me, कौन से stock में पैसा लगाने का है, कौन से stock में पैसा लगाने का है, and people get excited, बस ये ले लेते हैं, ये infra नाम है, ये नाम है, मुझे अगले महीने डबल करना है पैसा, and then अगले महीना पैसा डबल तो हो जाता है, उसके अगले महीना पैसा आधा हो जाता है, फिर लोग बोलते हैं कि but if you have been consistent investor in a mutual fund or even if you have been doing a consistent SIP, buying the largest bank of the country over last 10 years, assume that you don't wanted to do mutual fund, you wanted to buy stock. Even if you would have brought the largest bank or the best bank of the country in last 20 years, you would have made humongous wealth for yourself. Humongous, let me restate it, humongous wealth for yourself. All of us knew this is the best bank. All of us knew this is the least risk bank, but how many of us did invest our personal money? And probably this bank would have given a better return than any mutual fund, probably. I don't know, have the data point as of now, but this bank compounding over last 20 years would have been better than any of the mutual fund, probably. Everyone wants to look at the best passing stock to invest in, best passing car to invest in. But it's not about, it's about patience. Patience capital pays over longer term. All of us know which is the best company to invest in, but we find it expensive every point in time. So instead of investing in best quality company, you can invest it through best quality fund. There are a lot of funds including mine, where you can invest and compound wealth over longer term. Because sometimes the general knowledge is so simple that we complicate our life, and that's the reason we are not able to make bigger wealth. That is where over if I keep debating with my father also, that instead of investing anywhere else, even if you had invested in any mutual fund, the compounding of 10, 15, 20 years would have taken care of a lot of things, which is simple to know, but people, सबको मजा आता, किक आता है ना, मैं अपने आप करूंगा तो ज्यादा पैसा बनेगा, बट वो होता नहीं है.
Yeah, so I think so. I think as far as all the MFDs are concerned, because we are usually, when while promoting SIPs, I think generally the more riskier ones, the volatile, the more volatile funds are usually suggested. That is how you end up taking averaging. But I would suggest that
प्रणब भाई ऐसा होता नहीं. आप देखो कोई भी एक, let's do a category of a infra fund and let's do category of a consumption fund or flexi fund. Category of infra fund over longer term, even if you look at 5, 7, 9 years, would have compounded at a lower rate than a consumption basket or a flexi basket or any basket.
Yes, sir. I was just about to, just about to come there. That
volatile fund में आप पैसा compound करने long term के लिए लगा सकते हो, but you have to निकालना भी पड़ेगा वो fund से पैसा at the peak of the market, because that's where the valuation go crazy. So today, today a sector like a real estate, just almost the entire sector would have doubled in last 3 months or 4 months. But the very nature of the beast is such that it will double in 3-4 months. And then the compounding will take care of 3 years of compounding. 3 साल में compounding अच्छा लगेगा, but वो पैसा 1 साल में ही बना, इनफैक्ट 3 महीने में बना. वो 3 महीने में आपको इन्वेस्टेड होना बहुत इंपॉर्टेंट है, बट वो नॉर्मली होता नहीं है. इसलिए it's important to be invested in a good compounder than a volatile sector.
Exactly. So I think that this is, so as you rightly gave the example of HDFC Bank, that not a fancy bank, everybody knows it is the best. It is a long time wealth creator. So rather than looking at what is cheap right now, if you just end up doing a SIP in consistent good businesses, there is more wealth to be created with less volatility. So I think this is one of the ideal funds in which every investor should should think about having the SIP.
There are 276 people in this participants, so I hope we'll get, if not more, SIP if they are not still invested in it.
Right. Okay. So I think you have, you have answered this thing that there was a paint company which you thought was extremely costly, but it ended up becoming even more costlier. I don't know if I'm allowed to take stock names, but because the portfolio is there, let me take the name. If you want to answer, you can. But I would say that in the current context, the Bajaj Twins and the Avenue Supermart are are some of the stocks which usually are always talked about being very pricey. So what do you think prospects, and how do you think that these businesses might change down the line? What is the competition, and are you comfortable holding them at even these levels? And what do you think are the prospects as far as some new businesses which are getting listed? Do you see any interesting space where you might be looking at investing down the line?
So all the three companies you mentioned, if you see, I was just seeing the name of all the FMCG, consumer durable, all the companies few minutes back. In fact, today morning itself, the sales growth CAGR, of all the three companies you mentioned would be the highest in their sector. So if the sales growth CAGR of these companies are highest in this sector, and the opportunity size today, a retail opportunity size in India is $800 billion. Retail opportunity size, and the largest retail company of the country is not even $10 billion. The target market is $800 billion, and the largest retail company is not even $10 billion. And the retail opportunity, $800 billion, is also going to grow at a GDP growth of 8% plus the inflation of 6%. So the retail market size itself will grow at 12-13%. Plus the unorganized opportunity is so big. We are talking about the largest company being less than $10 billion. Think about the compounding these companies can do. If for the valuation I were to sell few stocks, like the mistake I did in the paint company when I was talking about it, you will miss this bus, and you'll never be able to. You'll have to decide to enter this name. Every smart investor think that मैं आज बेच देता हूँ 10% नीचे 20% नीचे ले लूंगा, but 20% नीचे हाथ नहीं चलता है, तब भी स्टॉक महंगा रहेगा. 20% नीचे आपका हाथ नहीं चलेगा तो 20% नीचे भी स्टॉक महंगा रहेगा, 10% नीचे भी स्टॉक महंगा रहेगा, 5% नीचे भी स्टॉक महंगा रहेगा. So good businesses को आप बेचते नहीं हो unless there is a change in the thought process or change in the dynamics of the business, change in the moat of the business, why the business will not compound over longer term. Because वो business आज महंगा है, कल महंगा है, परसों महंगा है, महंगा रहेगा हमेशा जब भी आप लेने जाओगे. तो आप आज बेच दोगे तो आप नीचे ले लोगे, वो बहुत difficult है बोलना, because human psychology doesn't allow you to buy it. You always look for a better price, and better prices never comes in the market.
Okay. As far as your banking and financial space is concerned, I don't see that there is any allocation towards these upcoming new banks, which are the small finance banks. Again, that is a sector which has a very big. I think the opportunity is huge. So any reason why you don't want to be there? There is not much clarity, or can you just share your thoughts on that space?
Good question, Pranav. So you have seen the portfolio well, but you missed. There is one bank there, so you missed one bank. There is one bank already in that space who I think can be the leader in that space. But point is that इस space में काफी disruption आएगा अगला 5 साल में. So here when you are seeing the industry will get disrupted big time in the next 5 years. Because I think the industry is bound to be disrupted. It's better to be with the largest bank, because those banks will have a right to win over longer term. You will not be able to see which bank will get disrupted and by what measures, because the business of banking is all about scale, and scale gives you leverage, and the cost to income ratio, which is important part, will only comes with scale. And when the disruption happens, the lower one are the easier one to get disrupted. So you have to choose from the lower one. We have one or two banks from those bucket. But yeah, the idea is intentionally to avoid small cap banks because I think we'll see a lot of disruption happening in this space.
You just mentioned that one of the stocks which you added recently was a food delivery company. Everybody knows, which one it is. What do you think are the future prospects? What new companies do you believe from which space can be added to this? Because in the recent past we have seen a lot of new companies from various spaces which were not so far a part of the market. Insurance wasn't there, maybe say hardly, maybe hardly 4 to 5 years back insurance wasn't there. The credit card space has just been there for the last 2 3 years. So what new things you see coming up in the IPO space which can be added and which is not currently reflected or the options aren't there in the market?
Sure, a good question. So we'll see a lot of tech companies getting listed in India. But tech means a B2C tech. I mean, a lot of tech companies. One recently got listed, which you and I were discussing about in the delivery platform. Though the company is loss making, but the unit economics of the company is very strong, and that's the reason we own that in our portfolio. But you will see a lot of new age tech company getting listed in India in next 12 to 18 months, and that will provide us opportunity to ramp those stocks in India. The FANG stock which we are talking about globally, the FANG of India will get listed, and that is where we will have to see which companies can compound wealth over longer term. In buying these companies, you have to choose who can have the highest market share, where because this in this space it's a very high disruption space. Winners will take it all, and normally you have to choose the right management here and choose the right market opportunity space, and we will be aggressively looking into this space because यहाँ पे the companies who will succeed will compound wealth over longer term, much bigger wealth. So we have an eye on it. We think a lot of new listing will space the market of tomorrow. We'll see a lot of companies of within this space who will enter into the big league. It's an interesting and evolving space, and that's what we'll keep an eye on.
So as you just mentioned that it is very difficult to exit because it is very difficult to enter and find lower prices. So how do you change the portfolio? Means what are the things that you might have changed that maybe 2 3 years back this was the space in which we were more allocated towards, but down the line things have changed. Otherwise you will be never selling any stock that you have.
Good point, Pranav. Yeah, so we do look at industry which are getting disrupted within the auto space. The battery segment was getting disrupted. We had a battery stock in the auto space, which we decided to exit. Within the insurance space, also we decided to churn and move to a better valuation stock without naming which one we sold. We did sell some stock and move to other stock. Within the media space, also we thought a disruption is going to happen. We did exit all the media stocks where we found that disruption is going to happen. Within the real estate portfolio, we found opportunistic to buy one stock. We did buy a stock, and we may decide to exit that because it was an opportunistic buy which we decided to buy. Within the pharma space, also given the valuations have become too crazy, we are looking to exit few stocks there. That's what we actively look to do. We actively look to see the emerging space. For example, QSR and food as a interesting space, and few listings have happened here. So we think that 10 साल बाद इंडिया में नासिक में पुणे में हर तरफ नए नए रेस्टोरेंट चेन आएंगे, and food as a option will become much bigger. So we have ramped up QSR space in our GenNext fund. So sometimes the breadth of the portfolio becomes bigger, इसीलिए number of stocks बढ़ जाता है. But we try and consolidate the stocks as and when we find opportunity, and we look to exit some stocks which have been a dog, and यहाँ पे we don't find much changes happening. We give them time. We give our time to a stock of 9 to 12 months, but still, if there is no changes happening, and if there is a big disruption happening, you look to exit those space.
Especially during these COVID times in the last say 18 months, there has been a lot of talk about these diagnostic players. But surprisingly, as of today, in the current portfolio, there is none of them. So
interesting. You found out a space which you missed, but we have captured it through some other way. So that's where the emerging market one has to keep looking at the at the space which is playing out and how that space will play out. We thought that this would have been disrupted by the largest company in the country who was planning to enter this space. We thought disruption would happen there, but we were proven wrong. But we have entered it through, we are playing it through some other holdings in our fund. That's where we are playing out. So the idea is that new emerging space you have to keep an eye on. If you miss something, you have to enter it again through some other way, or you will look to directly enter it.
So the TAM theory, which you just mentioned earlier, the the size of the pie, I think that is very, very big as far as that is concerned. So that is something which you might look to enter down the line.
I've entered it through a company. Indirectly, I've already entered it, and we own it in our fund. But I will look to enter some other space also directly. But yeah, we already own some name here, which is addressing the diagnostic business.
Okay. Well, I think thank you so much, sir. I think most of my questions are done. In case some of the other participants have any questions, I think Vaibhav sir will be glad enough to take it forward. Thank
Thanks,
you so
Pranav.
much, sir.
Nice talking to you.
Thank you, Pranav bhai, for this very engaging conversation. But आप
Thank
कहीं
you.
जाइएगा नहीं क्योंकि कुछ questions आपके लिए भी होंगे. And like you said that I'll be taking this question. Let me tell everyone that this session may get a little extended because हमारे पास काफी questions है queue में. मैं कोशिश करूंगा maximum questions को लेने का. But in case because of paucity of time अगर कुछ questions रह जाते हैं, I want to request everyone that please you reach out to your respective relationship manager and they will route the questions to Chanchal and we will come back to you. So Chanchal and Pranav, I will start taking questions. As I said, there are many questions, but let me start from one very interesting question which I read from Keval, Mr. Keval JT.
What I was saying is that the team here has done a lot of work on the fund, which is interesting to see. Yeah, that's one opportunity which we don't own directly, but we own it through some banking exposure. Few of the banking stocks which we own have a mutual fund, so we own it through them, but we don't own directly. So diagnostic space and the mutual fund space, a lot of ideas coming from your team as to where I can look at which are the themes which we have missed. Yeah, but that's a one space which we still don't own because we find the valuation expensive. I think yeah, we'll look to add it at a point in time.
All right. So one question which has been asked by about 2 or 3 different partners is that we have about 70 plus stocks in the portfolio. So why is this large diversification?
As I was talking to Pranav when he was asking me was when do you decide to sell the stock? So this fund by nature chooses to be invested in the businesses over longer term. Just for valuation, we don't choose to try and sell the stock first. Second is that the market breadth had gone up much stronger. To play the breadth of the market, where small cap and mid cap are participating, you had to choose to participate there. That's the reason the number of stock did increase, which we like to consolidate at an opportune time. We will like to own between 50 to 60 stocks, but yeah, the breadth has gone up because of the market. And it's important to play the breadth of the market when the breadth of the market is going up.
Pranav, this question is for funds other than GenNext. So I'd like to take this question to you. And from your experience, you can answer this to Aparna. So Aparna is asking that what is the difference between Balance Advantage Fund and Nifty Index Fund, which is more lucrative? I have both the funds in my portfolio. Do these funds give dividend or they are just growth oriented? So I thought this is more of a portfolio question, portfolio diversification question, and you are the right person to answer today.
Well, I would answer that a Nifty fund or a Balance Advantage fund are absolutely two different types. A Nifty fund is a pure equity fund, whereas a Balance Advantage fund is a hybrid fund. It is a combination of equity and bonds, where the level of both the asset classes will keep on going up and down as per the markets up and down. In every mutual fund scheme, close to every mutual fund scheme, dividend and growth, both options are always available. Dividend option, I would say up to say 6 months back was pretty okay, but after the changes in income tax where dividends have been taxed, I would suggest that dividend option is not a very lucrative option because of taxation on it. So I usually recommend to my investors to buy only only the growth plan. But I would say that for a investor who's looking for a slightly higher, a more aggressive allocation, a index fund would be proper. Whereas a person who would like to be more conservative, who would like to participate in the market only when it is worthwhile as far as valuation is concerned, I think the balance advantage is a more better fund. So it just depends on how the investor psychology is. If he wants to be aggressive, I think index is a better scheme. And if he wants to be conservative, then I think the balance advantage would be a better option.
All right, that's a very prudent advice. Chanchal, the next two questions I want to take it to you. The first question, मुकेश जी पूछ रहे हैं कि आपका जो view है future consumption story पे, though you have covered this, but still if you can reiterate, what's your view on future consumption story? और हमारा जो product है GenNext Fund, how is this doing in comparison to the other consumption oriented schemes in the industry? So though you have covered it, but I thought for the benefit of everyone, we can reiterate.
Yeah. So again, I to reiterate. Firstly, one should not look at just as a consumption theme. One should look at even from a flexi fund or other funds. This fund relatively does well. कंजम्पशन थीम में तो इंडिया का एवरेज एज 35 साल से नीचे है. आप और मैं अभी तक तो have we not even reached the per capita income of Indonesia, forget China or US. So there's a huge headroom for growth. So matlab we to give you an example, the per capita जब आपका per capita income बढ़ता है तो आप you will go and eat at a better place. Number of times you will eat out is better. You will do better holidays with your family. You will move to a better apartment. You'll buy a better car. You will buy a better. I mean, there's huge headroom for growth. You're not even seen in US. People leverage and spend. लोग कमाते 100 रुपए है तो 150 रुपए खर्चा करते हैं. I mean, because उनको लगता है कि अभी खर्चा कर लेते हैं बाद में सेविंग हो जाएगी. So India, given the demographic we are in, and given that government is focusing on PLI scheme and the tech story, which is the companies based out of Bangalore, they are going very strong, and they are increasing the salary we are seeing the huge amount of salary growth happening there. So I think tech will create employment, PLI will create manufacturing employment, rural में growth आ रहा है. तो कंजम्पशन अभी तो चालू हुआ है बॉस. अभी हम लोग कंज्यूम करना तो वी नॉट इवन टच द सरफेस. So there is huge opportunity for growth, and you will see that playing out in the next 5, 10, 15 years. And once the per capita income crosses that $2,000, normally growth काफी strong होता है. And we are in that cusp of that, almost $2,100, $2,200. So अभी तो start ही हुआ है.
Okay. And how do you see, the second part of that question was that how do you see our fund in comparison to some of the other consumption theme schemes in the market?
So the best part of our fund is that we are relatively well spread out. We look at other beta also in the fund. That's the reason Touchwood, the fund has done better than other consumption fund also over longer term, over shorter term and longer term also. That's the way we play out in this fund. We have leverage through banking. We miss out some stories which the panel has covered well, but yeah, that's the way we play this fund. The idea is to catch as many themes as you can. Sometimes you'll miss something, but that's the part of the fund manager journey.
All right. Since you spoke about banking, and Pranav was also asking about this, the another question is from on the banking itself. जो चित्तूर जी पूछ रहे हैं that banker Kamath said bank sector will grow and will touch 10 times the present value next 4-5 years. Do you agree with that view?
Mr. Kamath is the best guy in the banking to make a statement. I can't not agree to you. So point is there, इसीलिए अपने fund में banking रखा है ना relatively.
Pranav ji, next question is for you. That when as an advisor, when you suggest funds to your investors, so if somebody comes with 100 rupees, how do you look at GenNext fund as the part of that 100 rupees allocation? How are you doing this in current times? So flexi cap में कितना दे रहे हैं, large cap में कितना दे रहे हैं, debt में कितना दे रहे हैं, and consistent compounder like GenNext, इस तरह के फंड में आप कितना allocate करें? So if you can take an example of 100 rupees and then allocate between various themes. various?
Well, I would say as far as allocation is concerned, for every investor, it is always going to be different, because the allocation part really comes from where the investor is already coming from. What is he already having? What is the kind of time frame he has? So I would say that if I want to be allocating the whole 100 only to pure equity, I think in the B2C space, which as as Achanchal sir has rightly mentioned, that this has been a very, very big compounder for a very long time. And the businesses, I would say now in the last 18 months due to COVID, everybody understands what are, what are necessities. And I think major companies in this fund are, belong to those necessities. Banking industry was working, insurance was working, FMCG was working, pharma was working. So the whole world had stopped, but these businesses always worked. So I would say that from that point of view, these businesses are generally quite stable. Their growth rates have been quite consistent, because as sir rightly said that the scope is very huge. So maybe there could be some period where the funds may not perform because the stocks might have a time correction. But I would say that in this type of a theme, I'll be very, very comfortable putting 10-15% of the investors portfolio, which is to be allocated towards equity. And I would say it to be irrespective of what the age is, because कितना भी लोग बोले कि मैं बहुत aggressive हूँ, जो भी हूँ, every person in the end when he sees negative tick, he is going to pick that कि ये क्यों negative है. And I would say that this fund or this theme, which is consumption B2C, looks very, very promising to me, and it has been a very less volatile journey. So I would say it is ideal for any person or any investor to have this in his portfolio, and I'll be comfortable putting 10 to 15%.
Okay. So another question is from Aparna. Does Aditya Birla invest in international or global funds? Which is the best fund to buy in terms of income and growth? So let me try to answer that, Aparna ji, that yes, we have two funds which are investing in international equity. One is investing directly, which is called Aditya Birla Sun Life International Equity Fund. A good pedigree of this fund, and we have delivered very consistent returns. Another fund is relatively new, which is a fund of fund, wherein the product is investing further into a product which is being managed by Julius Baer. The fund, there are two funds, which is called, one is called Global Excellence Equity Fund, another is called Global Emerging Opportunities Fund. Both of them, they are, like I said, they are fund of funds. They are investing in the feeder fund of Julius Baer, and both the products are investing in international equities with certain theme. For the second part of your question, that which fund to which is the best fund to buy in terms of income and growth, see, I would sincerely request you to touch base with your advisor, because this is not a question where somebody can give a straight answer. There are many levers to these, to this point which you are asking. One has to check your goals, your time horizon, your taxation part, and so on and so forth. So rather than me answering this, I would sincerely urge that please reach out to one of the advisors, and he or she will be able to help you with this aspect much better than probably we can. So moving on to the next question. There is one question which I am not able to understand, but still I'll try to put it. Maybe Chanchal, maybe you can understand this. So Vishwas ji bol rahe hain that also your recent activities on ABFRL with high trade volatility on it. What's the rationale on it? Maybe he's asking that if we have invested in ABFRL, which has been volatile of late on the bourses. So what's the rationale on buying into this stock?
We look at buying businesses. Companies, some companies can be volatile, but we don't shy away from buying volatile stocks. But volatile stock is the nature of the business, is the nature of the beast. But point is that a business is improving and business is in the right direction, we will be invested in those businesses.
Can we add software stocks in this fund? One question asked by Rahul.
So there are two ways to answer it. Pranav had covered it in a different format. B2B software stocks we can't buy in this fund. So by those big companies of Bangalore or big companies in India space, we can't buy in this fund because those are B2B businesses. but we can buy GenNext businesses or the digital economy businesses. We can buy in this fund. So all the digital economy or the next generation businesses which are getting listed or anything which is listed in this space, we do evaluate, and we own some of these businesses which have been successful over past, and we think can compound wealth over longer term.
Yeah, so these are some of the questions which are there. Because of paucity of time, जैसे मैंने starting में बोला, I'll not be able to take every question today, but please reach out to your relationship manager, and we will ensure that we answer back by taking views from Chanchal. So thank you everyone for taking your time out and being with us in this particular conversation. Many thanks to you, Pranavji, for being with us and asking those very intelligent and very pertinent questions. And thank you, Chanchal, for your time and answering all those questions and giving your perspective on both markets and the fund. I'm sure everyone who's there on the call would be benefited today. Like Chanchal said, that this particular product is not only from the perspective of the consumption story. I think what he beautifully said is that you need to look at this fund from a different perspective and different lens as well, which means that not only that this fund is diversifying and it is trying to capture the consumption story, but what is more beautiful of the beautiful thing about the product is that it is trying to capture the future trends of where the GenNext will be investing or will be consuming, and then trying to capture those stocks, those sectors in the portfolio, and aligning the portfolio with the future trends. And I think in simple words, if I have to put it, I think this is one of the fund which is future ready. Future ready in the sense that जहाँ पर consumption होगा, जिन sectors में consumption होगा, जिन stocks में consumption होगा, जो upcoming themes हैं जिसके through consumption बढ़ेगा, the fund will be investing into those. एंड कंजम्पशन बढ़ेगा अपने आप में एक बहुत कन्विंसिंग पॉइंट है जो चंचल ने एक्सप्लेन किया कि एक पर्सपेक्टिव उन्होंने दिया कि पर कैपिटा इनकम किस तरह से बढ़ सकती है इंडिया की, अभी कहाँ है और आने वाले टाइम पर कहाँ होगा. बहुत सारे लोग प्रेजेंटेशन में अपना बोलते हैं कि हमारा यंग पॉपुलेशन है जो ग्रो करेगा, काम करेगा और इस इनकम को बढ़ाएगा. वेयर विल दैट मनी गो? That money will either go in savings or will go into consumption. And that's where the product will be a great suit, a great fit, to capture that opportunity. मैं repeat करता हूँ that India is growing, the per capita income is growing. People like you, me, that younger population is going to grow, and the per capita income of the economy is going to grow. This growth in income will lead to certain consumptions. Those consumptions could be through technology, through different sectors, and the fund will try to capture all those upcoming stocks, sectors, themes, all the future ready. So this is basically a future ready product, and I think this is a must have product in the portfolio. जैसे प्रणव जी ने बोला that जब उनके पास कोई कस्टमर आता है, so वो कम से कम 15% से 20% हर इन्वेस्टर को सजेस्ट करते हैं कि इस तरह के प्रोडक्ट में बैठिए and look at this fund not only for 1 to 3 years, but maybe for next 10 years, 15 years, and so on. So it's a beautiful product from our bouquet. If you still have other questions, please reach out to your respective relationship manager, and we'll get back to you. While we end, I just want to thank each one of you again, and just take best care of yourself, stay safe, and take good care of yourselves. Thank you, everyone. We will close the call now.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.